What's up you guys and welcome back to my channel. On this channel we talk a lot about how to increase your returns and how to beat the stock market. But sometimes high returns aren't everything. Because what good does money do if we have destroyed the environment we live in? So today we're gonna talk about green or sustainable investments and how your money can actually make a difference. There are different ways that your money can have more or less effect or impact. And there are also some pitfalls to watch out for when it comes to green or sustainable investments. All of which I will cover in this video, so keep watching. There are many of us who not only want our money to grow, but also want to make a difference with our investments. And there are a few different ways that you can do this, that are more or less effective, and that you can use if you want your money to do good and invest more green or sustainable. The first thing that most people might do or might think about is to opt out of certain companies. And it may be that you want to opt out of companies that are investing or dealing with oil or weapon or something that is not good for the environment, or someone who doesn't offer good working conditions for their employees, for example. A common misconception here when it comes to sustainable investments is that you directly contribute to the company if you buy their shares. That is, the company somehow receives money when you buy their shares, but this isn't true at all. When you buy a share on the stock exchange, the company will in most cases not receive money for it. Instead, this is a second-hand deal between the person who now owns the shares and you who wants to buy them. The company only receives money at the IPO, for example, when the company is first introduced to the public on the stock exchange, or during a rights issue when they issue new shares later on. A rights issue of shares is when a company chooses to introduce new shares, which are then offered to the public or existing shareholders to buy. And if you buy these, then your money will go directly to the company, but in other cases the money will not. As in this way, you don't have to worry that you directly contribute to a company if you're buying their shares second-hand on the stock exchange. On the other hand, indirectly, the company is affected by its market capitalization. This means how much the company is totally worth. For example, if a company wants to take out a loan, it's based on its market capitalization, so indirectly, when you buy shares in a company and thus, so to speak, contributes to the price going up, if many people buy the same share, of course, then it may be that the company becomes more valuable, it can then borrow more money or borrow cheaper and finance its operations more easily. So in this way, indirectly, if you buy shares in a company, you can influence the company's opportunities. Actively opting out of certain companies to invest in has been shown to have a rather small effect, unfortunately. And in practice it's also quite difficult to opt out of companies in this way, because even if you don't directly invest in a company that deals with, say, oil, for example, then maybe it's the case that you invest in another company that in its effort invests their money in this company, and in this way it's very difficult to see these economical connections that exist from the surface level, perhaps when you're looking for good stocks to invest in. So it's been shown that if you use this strategy to opting out of companies, it's a rather ineffective way to influence companies to do better. And there will always be someone who is willing to invest in these companies as long as there is something financially to gain from it. So even if you don't do it, someone else will instead. Another way is instead to actively choose certain companies or stocks to invest in that you think are doing something that is good for the environment, for example. And in this way you can have a greater opportunity to influence and make a difference than by opting out of companies. And if you want to influence the most in this way, you should try to invest in smaller companies, and preferably then if you can make sure that the company directly receives your invested capital if they're offering a rights issue or they're just listing on the stock market through an IPO. Slightly larger companies you may not be able to affect as much by this strategy. But investing like this in smaller companies, there will also be greater risk with these investments, because investing in a smaller, newly established company without any history is of course much more risky than investing in large, well-established companies. maybe needless to say. This not only directly affects the company you are investing in, but also other companies indirectly. Because if you want to invest more greenly or sustainable, then there will be more opportunities for new companies that want to establish themselves with a more sustainable focus. Because this may be where most investors' capital is right now. So it can also be easier for other new companies to establish themselves if there are investors who want to invest in their business, of course. And if that's where money is for new investments and opportunities for companies, it can force the other companies indirectly to steer their business in this direction if they're in need of new money for their businesses. But as always, when money flows into a certain area, there will also be those who will try to take advantage of this. So look closely at what you're actually investing in. I have no specific examples, but there will certainly be funds, for example, that take out unnecessary high fees because they have a green or sustainable profile, for example, and because they know that investors are currently interested in this. There will always be someone who will try to make money on this. There are also funds and companies that pretend to be a little bit better than they really are. This is what is called greenwashing. They simply try to pretend that their products or funds are a little bit more environmentally friendly or sustainable than they actually are in order to make money on this growing demand for these products. The whole concept of sustainability is also a bit vague. What I mean with sustainability is certainly not the same as you think about when you hear this word, and this makes it a bit arbitrary when you see, for example, funds calling themselves green or sustainable. So if you find a fund that you're interested in, look carefully at which companies are actually included and if they really invest the way you want to. And different companies will also be started within this segment just to try to take this opportunity where it's currently possible to get investments. So take a careful look at companies before you, for example, go into an IPO, so that there really is some substance behind the company. A well-known example of this is Nikola Motors. Nikola Motors manufactures battery-powered trucks. Well, we're yet to see one that is actually functioning. They're now accused of, among other things, faking a working truck in a video commercial from 2018. In fact, the truck didn't work, but the video was filmed in a specific place with the road with a certain slope, so that the truck could pick up speed by going downhill the slope. Then they set up the camera angle so that the slope on the road is not visible. In the video, it even looks like the truck is driving slightly uphill. While they claim that they never actually said that the truck was working or driving on its own, this was certainly what the video implied to the investors. And things like these are unfortunately almost impossible to spot. But there are other examples of companies where warning flags have been easier to see. So don't blindly invest in just an idea, but make sure that companies has demonstrated that their ideas really work. A third way to make the world a better place with the help of your investments is through pressure. And this way can have a fairly large impact as well. Because as a shareholder, you have the opportunity to be involved and influence the company because you are one of the owners of the company. And you can make your voice heard at the general meetings. And then you can actually affect the direction of a company's operations. It may not be that easy to be a single individual and go in and say something yourself, especially if you're a very small owner. But we can imagine, for example, that larger owners such as fund managers could buy into companies and affect their future development in this way if they wish to do so. So you can think about whether you should rather buy into more sustainable companies and contribute to them being able to get more capital indirectly for the businesses, or if you should instead buy into more unsustainable companies and try to drive their development to become more sustainable. A fourth way to make the world a better place is actually to completely ignore trying to invest according to some green or sustainable rules and invest in any company and donate part of your returns to charity. And here you can actually have the opportunity to also make a big impact. But it's important that you check where you donate your money so that it really goes towards what you think and not to a lot of other things. And one place where your money can make a difference right now and where 100% of it will go to charity is to donate money to Team Seas. Team Seas is a global movement led by YouTubers MrBeast and Mark Rober, where bigger and smaller YouTubers have joined forces, and the goal is to raise $30 million and get rid of 30 million pounds or 13 million kilograms of plastic and other debris from our oceans, rivers and beaches. So for every dollar you donate, 1 pound of plastic will be taken out of the oceans. 30 million pounds or 13 million kilograms of plastic waste corresponds to 85 football fields with a 1 foot or 30 centimeter layer of waste, or approximately 3 years of plastic rubbish that reaches our oceans. Team Seas has teamed up with Ocean Conservance and the Ocean Cleanup, and 100% of the donated money will be shared between these two organizations. So if you want to be part of this, go to teamseas.org. You will also find the link to them below in the description. And I just want to mention that this is nothing that I get paid to say or earn anything if you click the link. I say this because I believe in this cause and that together we can make a difference. And with this said, see you all next time.